decades of deflation and persistent deflation. Our guest host, Phil Blumberg, you were talking a little bit earlier about sort of hands tied in Japan. You sounded positively downbeat on the prospects for all the job owning by the BOJ. Is this more vindication of your postulate on where this country is?
I think, unfortunately, it may be. There needs to be structural change. It's difficult to effectuate a structural change in an aging market. But the Japanese are very resourceful. And ultimately, I'm confident that both world global inflation, world global common sense prevailing in the currency markets — we can't be at currency wars constantly — will ultimately prevail, and Japan will find lift. But it's moves like this that oftentimes have no real impact other than sector specific. And that's not really what the BOJ is about.
Does it have an impact on sectors that you're interested in Japan? Property, for example, office space.
Good point. The REIT market is very small in Japan. And the REIT market is just public real estate. Originally REITs in the U.S. came about to effectuate new mortgages in the real estate market. It's been ill-adapted to equity. The rest of the world loves it because it seems like a very easy platform. But the REIT market in Japan is very small. And so I think this is a way to prop up what is a very illiquid small sector. I don't see it having a major impact on our view of Japan. I do think we look at Tokyo real estate and say at some point we will be interested, but we're going to need to see resumed growth in that market. You can't invest in real estate in a stagflation market and expect to see robust rental growth. You see lift on your pricing because of inflation, but you don't see growth that's organic to the property itself.
You want cash flow, you want yield. What are they running at for prime office space in Japan right now?
Well, they're running at very low numbers, 4 to 4.5%. A lot of it is capital on the sideline chasing what they perceive as yield. And a lot of people chasing yield make the mistake of overinvesting in the principal and risking real loss of principal. So that's what happened in central London in the last 2 years. Bid up, bubble in London in the middle of a recession, and prices have come back down. And we've talked about this on your show. Yeah. You're ill-advised to make that kind of short-term move just to chase yield. You will lose principal ultimately.
Okay, wise advice. Bernie?
Phil, there's an ancillary issue going on in Japan. You hear about the big names, the famous labels out of Japan, the industrial companies, exporters, and they're increasingly investing overseas because they get a lot of bang for their yen right now. Are we once seeing another, a sequel to this hollowing out of industry story in Japan? I mean, you say the Japanese are very clever, and that's perhaps one way of battling, currency misalignment. But what does it do inside?
Inside, it certainly doesn't create structural growth. On the other hand, I was in Japan last month, and I've not seen as down a group of people in the business leadership. And it's a shame, because I remember 15 years ago, it was a robust, we can do anything attitude. 15 years of deflation takes the energy out of people. So I think what they're looking at is opportunities rather than a real strategy for expansion. And the reality is there are ways to deal with a rising yen rather than lament it. I do believe the Japanese business sector will come around. I do believe the government will eventually decide on some policies that actually make sense. And Japan's one of the most resilient countries in the world. In many regards. It has a culture that is strongly a work ethic. There's no fundamental reason it doesn't recover. But I think it's going to take world commodity price inflation, some of the fiscal inflation, which are all bad inflations, but to get everybody on the same playing field. And I think that will happen.
Okay, listen, Phil, back with you in just a bit for more.